That must be the sound of a bubble popping. Which one? Oh, there are so many. But today we're going to talk about real estate. Coming up. I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in custom strategies. And we believe so strongly in education and educated choices. And that strategy is based upon repeatable patterns that have happened every single time. And real estate pattern is happening yet again. Now, look, I don't know when Fed Chair Powell is going to pivot, and because real estate is clearly, it is a huge part of the global economy. Here in the U.S., roughly 30% of the economy. So it's pretty darn important. But let me show you what's going on. So in every single sector of the real estate market, we've got the commercial sector with Amazon as a great example, abandons plans for dozens of warehouses. And they estimate that the company has either shuttered or killed plans to open 42 facilities totaling almost 25 million square feet of usable space. The company has delayed opening an additional 21 locations totaling nearly 28 million square feet. The e-commerce giant has also canceled a handful of European projects, mostly in Spain. The moves are a striking contrast with previous years when the world's largest e-commerce company typically entered the fall rushing to open new facilities and hire thousands of workers to prepare for the holiday shopping season. So what is that telling us? That's telling us a lot of things about the state of the economy, but certainly the state of commercial real estate. Blackstone, single-family landlord to halt home purchases in 38 cities. That's pretty incredible. In fact, U.S. pending home sales fall 22.5% from the previous year. So we're looking at single-family homes, which then were going to be used as rentals. I mean, they have a pretty big arsenal. The housing boom has left the building. This is what they're talking about. Home Partners isn't first large investor to back away from the U.S. housing market, which reached a frenzied state during the first half of this year. Invitation Homes, American Homes for Rent, and KKR and Company's My Community Homes are among landlords that have slowed purchases during a period of high home prices and rising financing costs. So even in the single-family home area, and what I'd also like to point out is that the housing slowdown with you remember that's never going to end. It's never going to end. Well, of course, nothing goes straight up, and all of the schemes by the central banks were to support the housing market, which, as you know, again, is a huge percentage, 30% of the U.S. GDP. But this is true globally as well. So they're pulling away, and you can see that housing is cooling. Real estate pros pull back from housing. Fear has crept into the housing market, replacing the can't-lose optimism that attracted mountains of capital in the years after the most recent crash, because the Fed printed mountains of capital and gave it away for free. There's no wonder that we have bubbles all over the place, but all bubbles do pop. And so all of that new money printing that has helped create this massive amount of inflation that the Fed is having trouble controlling, well, it's impacting the real estate market as well. 1 in 5 home sellers are now dropping their asking price as the housing market cools. Homes in August sat on the market longer. The median listing price dropped, so the listing price dropped, and the average home sold below list price for the first time in 17 months. And in a new survey that came out today, for the first time in a long time, people are generally expecting housing prices to drop. So this bubble is over. And we don't know what the bottom is yet, so I wouldn't be rushing out there. I mean, you always have to have a place to live. But speculative real estate, for now and for probably quite some time, is over. It really will depend on how far down the Fed is willing to allow housing prices to drop before they come back in. Same thing with the stock market, same thing with the bond market. At what point will they pivot? Because really the only way to fight inflation is with deflation. And that's what they're doing. They're creating a recession just like they created this huge boom. So the question is the speculation over? I'm going to guess and I'm going to say yes. Now, they also, with all of these houses that are now coming onto the market, the prices are coming down. They need to create a new market. But some people are kind of savvy, understanding what's really happening to home prices, and others aren't. So as you know, you probably know anyway, that student loan, there was a level of student loan forgiveness. Now, this is a chart of student debt, federally backed student debt. And you can see when they started the program, which was back in 98. And then you can see in 2008, which is this gray bar here. Oops, I didn't get my little pen, sorry. This gray line right here, that's 2008. And it was encouraged for people to go back to school and take on debt. But that debt has also held them back from having the ability to borrow, to start families, to buy homes. So by forgiving this debt, well, it kind of does a few things that they need them to do. Let's take a look. Because they're forgiving up to $20,000 in student loan forgiveness. And that's going to have an impact on your credit score and also your debt to income ratio. Historic student loan forgiveness plan, this has never been done before because of course you saw when it started, could mean big changes for the credit reports of tens of millions of Americans. And it may soon be easier for many borrowers to purchase a home or start a business. So maybe these are naive people that just really don't understand what they're facing right now, because basically what they want is the people that don't understand what's happening to catch a falling knife. Now look, you got to have a place to live. So I'm not saying that you should or should not buy a house, just like I haven't said what you should do all the way through it. But, why not? Most federal student loan borrowers will be eligible for some forgiveness up to $10,000 and up to $20,000 with a Pell Grant. Other recent changes coming for student loan borrowers, including a second chance for those who had defaulted on their loans, may leave them in an even better financial situation so they can take on more debt and buy overpriced housing. Yeah, sounds good to me. What do you think? And I hope you realize I'm being completely facetious. But they will do anything to support this, almost anything. Let's see if they turn around and when they start lowering the rates again. And I'm going to tell you, they waited too long this time. They're going to wait too long next time. But in Washington, D.C., wow, you can get loans up to $202,000 for new home buyers. Well, the median price of a home in the area, Washington, D.C., is $619,000. So that means they're still going to be borrowing about $400,000. Some residents will qualify for 5 years of deferred payments while others can qualify to deferred payments until their home is sold or they move. So is this really a loan or is this really a gift? And by the way, you need to understand that it's us taxpayers that are doing the forgiveness on the student debt, because we're the ones that back that, really, and also here in Washington, D.C. And Bank of America, well, they have a new program. Under the B of A program, the lender is giving home buyers down payment grants, so they don't have to pay it back, of $10,000 to $15,000, because they're going to test no down payment mortgages. Now, I'm kind of thinking that they ran that test back in 2004, 5, 6, 7 till that market cracked. But I guess they don't know. And by the way, if you give somebody something, it's kind of different in value to that person than something that they have worked and sweated for. Not saying they should or shouldn't do it. No judgment on it. I'm just saying anything to keep this market floating with people that really don't understand what's going on. But, we have to look at the gold to housing ratio. It's a measure of relative value between gold and real estate, and it's the number of ounces of gold required to purchase an average single-family home in the United States. Oh, excuse me. See, it's true. My mother always said, if anyone sneezes when you make a statement, it's absolutely true. I think that's an old wives' tale. But okay, it is true anyway. So let's take a look at that, because we know that historically, ultimately 25 ounces of gold-ish would buy an entire city block in Berlin, buildings and all. I've done studies on this in numerous parts of the world so you could see, but this is what the opportunity is in real estate. Because right now, gold is suppressed because a rising gold price is an indication of a failing currency. Where real estate prices are still up at nosebleed levels, that's going to flip-flop. And if you're holding gold, so therefore you're holding your purchasing power, you are going to have huge opportunities in the future. And what we're really going to be looking for, which you can kind of see here, that's a cup, right? And then it broke out, went to new highs. Here's another cup, okay? And we're down at the bottom of a cup. It doesn't mean that this is not the time to buy, because there are too many things that are happening. And this goes back to pretty much the beginning of the fiat money system. And we are at the end of that life cycle. So make no mistake, if you're holding gold, then you've put yourself in a position to take advantage of what happens to real estate during these transitions. So the question is, do you have your gold yet? But additionally, you need food, water, energy, security, barterability, wealth preservation, community, and shelter. These are all the things that we need as we are going through this transition. And, if you haven't yet, make sure that you subscribe, hit that bell below. We'll let you know when we're going live. You can also listen to us anywhere, anytime on our podcasts on all major platforms. And if you haven't done so already, you need to have a strategy in place. The central bankers, the corporations, the government, they have a strategy. And it looks like it's at odds with each other, because you've got the central bank supposedly fighting the inflation that they caused, and you have the government doing everything to stimulate the economy, so create that inflation. This is not a good place to be in. We're at a really dangerous point in this trend cycle because the Fed is battling for its credibility. Like any drowning man, I'm not going down with the Fed. Are you? So if you like this, please give us a thumbs up and share, because you absolutely 100% need to have a strategy and need to be executing it, and you need to do it as quickly as possible. I can't tell you that the system's going to implode on Tuesday morning at 8:35, but it could. We are in a very fragile and vulnerable state. So please, it is time to cover your assets. And until next we meet, please be safe out there. Bye-bye.